Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks Director of ETF Research, Nina Mishra, to talk about one of our favorite topics that we've been talking behind the scenes about for a few weeks now, and these are the unique and unusual ETFs. What's going on with the specialty niche ETF world? What new and exciting ETFs have launched? What are some of the favorites that are still out there? And unfortunately, which ones have been liquidated or shut down? Because that's been happening too. So welcome, Nina.
Hi, Tracy. Thanks for having me on. Yeah, this is a very interesting topic, and I'm really excited about this discussion.
Yeah, me too. So for all of you who are listening, we do have the video podcast happening again this week on this podcast so that you can see some of the charts. We're going to show some of the holdings on these ETFs and, some interesting stuff off of Zacks.com. So if you want to tune in to see the visuals, you can find this video at Zacks.com/YouTube. That'll take you right to our YouTube page and you can find it there. But for everybody else just listening in, we're going to do our best to give you as much detail as possible about what is being shown on the screen as well. But that being said, and now that we've taken care of that little stuff, Nina, this all started because I saw in the news that the Jim Cramer long ETF that they launched only 5 months ago was shut down. So people might not remember they launched a long Jim Cramer ETF and the short Jim Cramer ETF. And the long one, nobody cared, apparently. I guess it only took in 1.2 million in assets, which is, it might sound like a lot to the average person, but that's almost nothing in the ETF world. And so they threw in the towel real quick on that one, but they are still running the short Jim Cramer ETF. And I didn't have time to look and see how much assets is in that one, but it is doing slightly better, I believe. So what goes on when, someone launches one of these niche ETFs and then it doesn't do well? Is this common to just kind of throw in the towel like this quickly within 5 months?
Yes. So let's take a step back and remind our listeners that 2020 was, in fact, we can call it the year of thematic ETFs. So all the themes like cloud computing, online shopping, driverless cars, EVs, big data, cybersecurity, all these kinds of ETFs, meme ETF, trend following ETF, they saw a lot of attention, a lot of interest from investors in 2020 in the post-pandemic boom. We saw a boom in retail trading too. So driven by all the meme mania and Robinhood trading crowds. So a lot of thematic ETFs launched in 2020 and 2021 as well, because you think about a theme, you plan something, then it takes time to file and then get approval by the SEC and bring that product to market. So in 2020 and 2021, a lot of thematic ETFs launched, but 2022 was brutal for many of these themes, particularly those associated with high growth, high beta stocks. So many of these providers, they struggled with these thematic ETFs last year. So for a bigger provider, just say like State Street or BlackRock, they also launched some of the thematic ETFs. So for them, it is very easy to run a loss-making ETF because they have other hundreds of ETFs that are making a lot of money. But for a smaller provider who has just one, two, or three ETFs, it is very difficult to run a loss-making product. So these ETFs, if they did not see interest from investors, or if their performance was terrible last year and investors withdrew their money, so for them it was very difficult to run those ETFs. So Bloomberg reported recently that this year so far, investors have pulled 2.6 billion out of thematic ETFs, and that is the worst year of outflows going back to 2001. And the article pointed out that in 2020 and 2021, these thematic ETFs had taken in more than 94 billion in combined inflows. And one of the the poster child for these lack of interest in thematic ETFs is the ARK ETF. So despite its impressive performance this year, which is driven mainly by AI mania, and anything related to AI has surged this year, but investors are just not interested. They are not putting money into these thematic ETFs, even if those which are doing well. And closure has surged. So that there was an article in the Wall Street Journal recently that globally ETF closure, fund closure, so that includes other types of like mutual funds as well, that has climbed to 929 year to date in 2023. And that is from 373 at the same point last year. So a big surge in closures too. So the main reason is that because many of these ETFs suffered last year and investors are not interested. So for providers, smaller providers, it is very difficult to run those products. Now, going back to your point regarding LGIM and SGIM, the long Kramer tracker ETF and the short Kramer tracker ETF. So when I saw these filings, I thought it was just a gimmick and these ETFs will not launch, but they actually launched. And I had Matt Tettle on my podcast and he explained how these work. So he has people sitting in front of TV actually and watching everything that Kramer does, and they note down what he's saying. He's saying buy, buy, buy here. He's saying sell, sell, sell here, or saying something positive about one particular stock. So these are very interesting ideas, and we know that there are people there are many haters, Kramer haters, more haters than lovers. So as an idea, it was funny. It made a lot of sense. It sounded interesting, but tracking those investments like that, it means that the turnover will be very, very high and the performance is going to suffer. So these kind of ETFs, they may be this may sound interesting, but they are not exactly great investment ideas. Whether you believe that Kramer is a great investor, a very smart investor, an investment advisor, or he's the worst, but these are not actionable investment ideas. And one idea that I had liked, and I would like to mention, is that when I saw the filings and the launch of Unusual Whales ETFs, the one which tracks the portfolios of Democratic lawmakers, and the ticker symbol is Nance, Nance, and the other ETF which tracks the portfolio of Republican lawmakers, the ticker symbol is Cruz, Kruz. So those Unusual Whales has been quite active on Twitter, and they had posted two research reports which showed that the portfolios of these lawmakers, policy makers, they do much better than our portfolios. They outperform the broader indexes. And maybe these guys are just too smart or lucky too, because we know that to succeed in timing the market, you have to be lucky as well as very smart. Even then, timing the market is not easy. So if these people, the Congress people, they were able to beat the market, so maybe they know something more than we do. There is no proof that they acted on insider information, but Yes, their portfolios did very well. So those ETFs, I was interested in those ETFs and see what those ETFs were holding. But again, tracking someone's portfolio is not easy. There is a time gap between a trade and when it is reported to the authorities, and then you buy that or sell that particular stock. But by that time, the action may already be over. So these are just funny, weird ideas, but not exactly great investment themes.
Right. But let's expand a little bit on the unusual whales ETFs that you just mentioned, because some people might not be on Twitter and, following what this story is. So basically, for several years now, there's been complaints that some of the congressmen have been trading on issues going on Capitol Hill, like that some congressmen or senators were trading ahead of COVID, for instance, and that or they're on some committee that's approving money for a defense project, and they're buying the defense contractors on the side, things like that. And so a lot of people have complained about it over the years, and especially with a few people like Nancy Pelosi, her investment portfolio seems to be fairly active, and the congressmen do have to file, disclosure forms that, as you mentioned, show kind of what the trades are, but it's not, there is a timing issue. They don't have to do it within 48 hours, I don't think, like the SEC makes the insiders. So you don't really know for sure when they're getting in and out or all that stuff. But people do like the idea of either being able to track this stuff so they can short it or to go long, because as you said, some of them have a pretty good track record on like what their portfolios are doing. And so why not like try to follow along with what Nancy Pelosi or her investment advisor is doing with her portfolio? So I was curious about the Democratic one, well, on both of them, but let's start with the Democratic one. It is the ticker NANC because it is supposed to be for Nancy Pelosi, because she's kind of the one who's always called out the most on the Democratic side for her trading or her portfolio. But what is in this? Because they do have to go in, kind of like we discussed about having someone sit in front of CNBC to watch Jim Cramer. They do have to go in and see the filings that the congressmen have to make and then buy whatever's in there, right? Like, but
Yes.
what is it?
So let's take a look at the unusual whales Democratic ETF. Ticker symbol that we mentioned was Nance. Very interesting ticker symbol, but it makes sense too. So this is very top heavy and very much concentrated in the Magnificent Seven, which is kind of surprising. So Microsoft accounts for almost 11% of the portfolio, and then 8% in Amazon, 7% in Apple, and then you see this 6% in a short-term bond ETF, which is not surprising because of the juicy yields. Short-term bond ETFs have seen a lot of interest, and there is not much duration risk either. Then you say Salesforce, Alphabet, Nvidia, and Tesla as well. So all big tech ETFs or stocks are there. Now let's take a look at what the other side, the Republican ETF holds. So the ticker symbol is Cruise. And where are the holdings? So this is heavy in energy, and this is not very concentrated, not as top heavy as Nance ETF. So ConocoPhillips is about 3% of the portfolio, and then you see Accenture, Shell, and a lot more energy names, NGL Energy, and you also see Philip Morris. Interesting. Amazon, Intel, and PayPal, FedEx are also there in the top 10 holdings.
Now, do we know who exactly is in this? Obviously, it's, named after Nancy and Ted Cruz on the other side. But I mean, do they have like 20 different politicians that they track? Is it just one? Is it just each of them? Because I would think that would matter on which portfolios they're looking at. Because I mean, just looking at this for the Republican one, there's a lot of energy in there, as you mentioned. And obviously, Ted Cruz is from Texas. That might make sense that his portfolio is investing in these companies that, do a lot of business there. The other one, the Nance one, she's in San Francisco, Nancy Pelosi. So it might make sense that she's also in a lot of the tech companies, but obviously not all the names you mentioned because Microsoft and Amazon are both headquartered in Seattle. So that doesn't totally fall into place. But I'm just curious on are they only looking at one portfolio or is it multiple ones? Do we know?
It is multiple portfolios. So I'm showing the overview of the ETF, which shows its strategy. So it basically invests in equities, securities purchased or sold by Democratic members of Congress as well as their spouses. So they have to file all the trades made by either themselves or by their spouses. So it tracks all those Congress people, all members of Congress. Not only it's not only Nancy Pelosi's portfolio. So, but I guess some of the members of Congress are very active, and those who are active, they do a lot of trading. So, I do not know how many members of Congress's per portfolio these ETFs are tracking, but there must be many.
Now, do we know if one of them is more popular than the other? Are more investors buying, the Democratic one versus the Republican or vice versa? Do they have about the same?
So both haven't seen a lot of interest, but I think Nance has more assets than the cruise one. Let me check the assets real quick. But if I remember correctly, but both of them are really small, and the performance has lagged because, as we mentioned, tracking is not easy. So Nance has about 10 million in assets, just 10 million in assets, which is really small. And the cruise ETF has 5 million in assets, so about half, but both are really small.
Now, how long will the ETF management companies keep this open if the assets remain this low? Obviously, they closed down the long Jim Cramer one pretty quick within 5 months. But I remember one time you told me that you like to have the ETF over 15 million in assets. Is that still the cutoff? And, when do they determine, hey, this isn't going to work? We're going to throw in the towel.
Yeah, so over 50 million, and if an ETF is not able to gather over 50 million within a year of its launch, that means most likely it is not making money. And again, it really depends on the provider. If the provider has just 2 or 3 ETFs, then they will find it very difficult to keep those loss-making products running. For a bigger provider, which is making a lot of money on other products, it is much easier. They may keep some of the loss-making products running for a while before deciding to close.
Yeah, that makes sense because they can take the hit and wait a little while. Okay, so it's 50 million, not 15, and so that's a much higher level.
Yeah. So these have been around, the two that we talked about just now. They have been around for a few months at least, and I really doubt whether they'll be able to get to 50 million within a year of their launch. It looks difficult because again, these are very difficult to these are very difficult implementable investment ideas tracking someone's portfolio.
So what happens if you are in one of these that gets liquidated? What if I was in the long Jim Cramer and now they announce they're shutting it down? Do they just obviously close out all the positions and send me a check for whatever it's worth at that time? Or how does that work?
Yeah, so you will get your money back, whatever is the NAV of that particular ETF on the date of liquidation. You will get that money back. So it's just there may be tax consequences at times. Only if that particular ETF had made some money, then there may be some tax consequences. If it had not made any money, then obviously there are no tax consequences either. But you just have to invest your money somewhere else. That is another headache if you were planning to keep invested in that, staying invested in that product for a longer time. Now you have to think about investing somewhere else.
Okay. I just want to put a side note. One of our favorite recently launched ETFs, the Meet Kevin Pricing Power ETF, ticker PP, is at 41.7 million in assets. So it's hanging out right near that 50 million level, but it only launched in November 2022. So it's got some time to still try to get closer to that 50 million. But year to date, now I see it's up 43.5%. There he is. And I looked this up. The NASDAQ is up only 31.5%. So it's beating the NASDAQ, but the triple Qs, that ETF is up 40%. So it's still a little bit above even the triple Qs, but it does have that higher expense ratio than the triple Qs. So there's the holdings.
Right. So let's take a look at the holdings. So it has a very concentrated portfolio. Tesla accounts for about 26% of the portfolio, and Nvidia is about closer to 10%. And then you say Enphase Energy about 14%. Yes, you get a very concentrated portfolio. And I checked. So it is very slightly outperforming the QQQ year to date, but since inception, it has lagged the QQQ ETF. So, so you get a very concentrated portfolio, and you pay a higher expense ratio. And do you really trust this asset manager who doesn't have a very long track record of managing assets, or as an ETF provider? So do you really want to bet on that particular person who has kind of been lucky with his Tesla selection? So yes, I think for most investors, it is better to stay with QQQ than try to bet on these products. So interestingly, there was an article in Bloomberg recently that only one mutual fund, no ETF, has consistently outperformed the Qs, the triple Qs, the QQQ ETF over 5, 10, and 15 years. And that is the Barron's Partner Fund. We all know Ron Barron, who is a big Tesla bull. So he's one of Tesla's biggest investors, biggest shareholders too. So Tesla accounts for about 40% in that particular mutual fund. It is Barron Partners Fund. And then he has also invested in other Elon Musk companies. So mutual funds can actually invest in private equity too. So he has about 8% exposure to SpaceX and about, I think, 2% exposure to X, which was earlier Twitter. So if you are a big, Elon Musk bull, then maybe take a look at that that mutual fund, which has about 50% exposure to Elon. But Ron Marin he's an established asset manager. This particular mutual fund that I'm talking about, that started in 1992. So very long track record, and has about 7 billion in assets.
Do we know what the ticker is on that one?
Yes. Let me show that to you.
I think a lot of people aren't used to, the mutual fund concept because ETFs are just so prevalent. They're like, oh, a mutual fund. What's that? But this was the thing older people used to invest in for many decades before ETFs really started rolling out and made it easier to go over to the ETFs. But some of the mutual funds like this one have the long track record and have the same asset manager over all that time.
So let's take a look at the portfolio of this particular mutual fund. BPTIX, Parent Partners Fund, has close to 7 billion in assets. And if you look at the portfolio, which we were talking about, holdings, here are the holdings. So Tesla is 41% of the portfolio, and SpaceX is about 9% of the portfolio. So you get a very concentrated portfolio. So you really have to believe in Musk, then only you'll probably look at this particular mutual fund. And it is pricey. The expense ratio is about 1.4%, if I remember correctly.
Wow. Okay. Yeah, all investors should be looking at expense ratios for sure.
So I think for just I wanted to highlight, because it is so difficult to beat the major broader indexes for most investors. It makes much more sense to invest in either a S&P 500 ETF like WU or IVV, which charge just 2-3 basis points, or if you have a slightly higher risk tolerance than QQQM, which is the cheaper version of QQQ, just 15 basis points in expense ratio, and you get exposure to all these magnificent seven and all those growthy, innovative companies in one fund.
Yeah, there's no reason to get fancy unless you really want to own the global music industry ETF. One of my personal
Yes.
favorites that's
Yeah.
on the unusual list, ticker MUSQ, it looks like. And I was curious to see what was in that one because I instantly thought, well, Sony has to be in there because they are so big on the music side. They're one of the biggest music publishers. But then I wasn't totally sure on who else would be in there. So it is kind of an interesting list, really.
Yes, so let's take a look at this ETF. So I'm sharing the screen here. And well, the top holdings are pretty interesting. Sony is there, as you mentioned, but the top holding is Alphabet, more than 8% of the portfolio. Amazon is also about 8%. Apple is 7%. And then you have Sony, Roundhill, Music Royalty, and other holdings. So yes, again, a very interesting concept. But would you pay this kind of expense ratio for this ETF? I do not know whether the gross expense ratio is 92 basis points, adjusted is 78 basis points. So this launched just a few weeks back and has about 10 million in assets. Uh, I really do not know whether this is going to be successful. It's very difficult. But again, with these kind of themes, if you want to invest in Alphabet, Amazon, and Apple, and a little bit of Sony, maybe buy Sony separately and just invest in QQQ for the other holdings. those are my those
Right.
are my thoughts.
Right.
Yeah.
Doesn't it become an issue with some of these issuers? Like these big companies are in so many different areas and that we kind of don't even think about it. Cause I was trying to think, well, why is Alphabet the biggest holding in there? But because they own YouTube, that might make sense because YouTube is huge on the music scene now. And so that's why they have to have it in there. But all of these big Magnificent Seven companies, or at least most of them, are in so many different areas that everyone just ends up owning the Magnificent Seven in all of these ETFs.
Yes. So, yeah, you look at any theme and you will most likely see some of these stocks that you may already own in your S&P 500 index or the QQQ ETF. So with thematic ETFs, if you believe in the theme, there are no pure plays. If you look at cloud computing, then you see the most obvious players. Again, there are also Amazon, Microsoft, and Google. If you look at AI, you will get NVIDIA, Microsoft, Google, and all other companies. So whenever you invest in a thematic ETF, make sure that you take a look at the holdings and is that what you really want to invest in, or it is just some gimmicky name, but it is kind of giving you exposure just to some of the largest companies in the world.
Now, I see here on the video podcast, you brought up the screen for another favorite on the unusual list, which is the Kpop ETF, which is K-pop and Korean entertainment. This could be a hot one for anybody who's a fan, right? I might want to own any kind of company that's involved in K-pop. But what are the companies in this one? I didn't look it up at all prior to this podcast.
Yeah, so this ETF has been around for many months now, and this has just about, if I remember correctly, about this has just 3 million in assets. So this I will not be surprised if it closes soon, though it is a very interesting concept, and Korean TV soap opera. TV shows, and as well as some of those music groups. They are so popular with younger people. Let's see what it holds.
Yeah, what's in this? Is this again like Sony, Spotify? I would think it would have some of those on the music side. I'm curious to see if Netflix is in this because they're spending $500 million on making a whole bunch of K dramas because they're so popular now.
So actually, you get a very different kind of exposure in this particular ETF. So all these holdings, I cannot even, I
Pronounce
do
them.
not, because I
These are
cannot
foreign
pronounce.
companies. Well, that's
And these
good.
are
That's
all
what.
Korean
Yeah.
companies. So you did that. So the fund is actually doing what it is supposed to do. So it is not a hidden mega cap tech ETF with the name of with a different name, and you get exposure to all these companies. So yeah, another point which I would like to add, that one good thing about owning thematic ETFs, if you really believe in that theme. For example, a robotics ETF. So robotics ETF may hold many companies, many Japanese robotics companies or South Korean robotic companies, because robotics is such a big theme in Japan. Japan has been a pioneer in the field of robotics. So if you want to go and buy those Japanese companies, it would be very difficult for any retail investor. But in an ETF, you can get exposure to those overseas global companies also that are leaders in that particular theme. But always makes sense to take a look at the holdings, and make sure that this is the kind of exposure that you want in that particular fund.
Yeah, that's excellent advice. Okay, I think we've covered a lot of the interesting ones that are out there right now, and we will be checking in to see how long they last, if they last. The short Kramer ETF is still out there. That one is still going. So you never know on some of these, and I'm sure there'll be some more new ideas. There always is, and I'm always a big fan of ETFs because they put out the great tickers. I mean, how hard is it to remember Kpop? I mean, that is the ticker. So I await the next ideas and the next hot things. But meanwhile, let's review some of these tickers again. They are easy to remember, but just in case you missed them the first time. So the unusual whale ETFs, the Democratic one and the Republican one, are the Democratic one, NANC, like Nancy, NANC. The Republican one is Cruise, but with a K, KRUZ. Then we mentioned just general ETFs that you could do of the indexes, the QQQ with the M at the M as in Mary is the cheaper one. And then we mentioned VOO and IVV are the S&P 500 ETFs. We mentioned Kpop again right here at the end, KPOP. That's easy. And the global music industry ETF is MUSQ, also easy to remember. The Ron Barron Mutual Fund, if you're interested in checking that out, is B as in boy, P as in Paul, T as in Tom, IX as in X-ray, BPTIX. And that's the one that's heavily invested in Elon Musk and has that huge Tesla position. We also talked again about Meet Kevin ETF. He's a YouTube influencer. He's got like 1.3 million YouTube subscribers, and now he has this ETF. And that ticker is just P as in Paul, P as in Paul, just two letters, PP. And some of these, we mentioned the stocks inside. A lot of them were the Magnificent Seven, Alphabet, GOOGL, Apple, AAPL, obviously Tesla, TSLA, And Sony was in the music one of my personal favorites out of Japan, ticker SONY for that one. So a lot of ideas there if you're interested in what's happening out there with the ETFs. As Nina mentioned, make sure you're going out there and checking them all out because you really need to know what they're holding. Because I was surprised at the Kpop. I was not expecting it to be all Korean companies. That's interesting to me because I don't know enough about them and I might not have as much access to them as Nina mentioned. So maybe I do want to own a Kpop ETF because I can't get that through like the QQQ or the VOO. So that's an interesting way to look at some of these ETFs. You might be able to invest in things you otherwise couldn't. So make sure you're clicking on those pages. You can, go to the websites of the ETFs themselves. They'll have the holdings there, the expense ratios, all that stuff, and find out what's behind the curtain on some of these because maybe, this is somewhere you might want to park some money. But otherwise, we'll be back. We'll be back always every week here with more stocks and ETFs on the market edge. And so until next time, I'll see you then.